Now, many investors, especially those outside the US, are starting to ask themselves, should I start diversifying into Europe? Should I hedge against potential volatility in the American market? Some of it is due to political uncertainty in the US, with Trump back in office, potential changes in economic policy, and speculation about the US role in global markets. It looks like we're moving from MAGA, make America great again, to MEGA, make Europe great again. And hey, I'm all for it. Now, let me be clear up front. I personally am not making that move. I still have my money invested in the S&P 500, Nasdaq 100, and I don't see any fundamental reason to change that. In fact, with all this market noise, I actually see this as a buying opportunity rather than a reason to look elsewhere. But I totally understand why some people, especially European investors, are possibly considering shifting part of their portfolio to European ETFs. And if that is the case, then the Euro Stoxx 600 is probably the best choice for broad market European exposure. So in this video, I'm going to go deep into the Euro Stoxx 600, explain you what it is, which companies are in it, how it compares to the US markets, and whether it makes sense for your portfolio or not. Right, but let's start off by discussing the basics. What is the Euro Stoxx 600 and why should you care about it? The Euro Stoxx 600 is one of the most widely followed European stock indices. It includes 600, as the name implies, of the largest publicly traded companies across 17 European countries, covering not just the Eurozone, but importantly also key markets like the UK, Switzerland, and the Nordic countries. Now, in terms of market coverage, it's more comparable to the S&P 500 than any other European index. Now, you might have also heard about the Euro Stoxx 50, which includes only the top 50 blue chip companies from the Eurozone. So the key difference here is that the Euro Stoxx 50 is much more concentrated, focusing only on the biggest players in the Eurozone, whereas the Euro Stoxx 600 gives you broader exposure to large cap, mid cap, and even some small cap stocks. So if you're looking for a one-stop shop ETF for European stocks, the Euro Stoxx 600 is your best bet. Now, here's where it gets interesting. The sector breakdown of the Euro Stoxx 600 is quite different from the S&P 500. One of the biggest differences is the role of technology. If you look at the S&P 500 or the Nasdaq 100, tech is by far the dominant sector, with giants like Apple, Microsoft, Nvidia, Amazon leading the index. But interestingly enough, in the Euro Stoxx 600, technology is actually a much smaller piece of the puzzle. But let's actually jump over to Just ETF, great free resource that you can use to find ETFs of your choice. And here we see the top Stoxx Europe 600 ETFs. And obviously they're different to choose from. You can choose by best performing. You have the largest by fund size and the cheapest. But I want to focus on the largest to have the most volume in there. And right now you can see it's actually Amundi Europe 600 UCITS ETF accumulating. I know it's a mouthful, currently with a fund size of around $8.2 billion, and that is here listed in pounds. So let's jump into this, and you see a couple of headlines over here. The expense ratio at 0.07%, actually really not too bad when you think that this is managing 600 companies. Yes, right now I'm paying only 0.03% for my S&P 500, but yeah, really not too bad given, another additional 100 companies. And don't forget, here we have companies from many different countries all in one ETF, so you're definitely much more diversified. It's accumulating. I do believe they also have a distributing one, but here the dividends are automatically reinvested to buy you more shares in that ETF. It's physical, which I like. It's not synthetic or some other way of replicating the ETF, so they're actually buying those shares. See the fund size and the holdings over there. But let's have a look at actually the holdings. And that's what I said, here it's much less focused on tech. For better or for worse, it is much more balanced. You see here, the biggest one right now in terms of sector is actually financials with almost 20%. Funnily enough, in the Nasdaq 100, financials is actually not included. So that's something to consider as well if you're not into financials. But again, here it is a major role in there. You have industrials as well, healthcare, consumer discretionary, consumer staples. And then we have only technology with currently 8.6%. So really quite a small percentage. Then a couple of other ones, basic materials, energy, utilities, and a couple of other ones in there as well. Also, you see the country breakdown, obviously with the UK leading the charge, right? And that's also the difference to, as I mentioned before, the Euro Stoxx 50, where you don't, for example, have the UK represented. So if you really want a more holistic picture of Europe and UK, then definitely the Euro Stoxx 600 is the way to go about it, and has a really strong dominance here with 22%, followed by France, Switzerland, and only then we have Germany, which is quite interesting. We always say it's the powerhouse of Europe. Well, in this example, their representation is not that heavy, at least the weighting of the companies in there. And then let's have a quick look at the top holdings in there also. Currently you see ASML Holding from the Netherlands and Novo Nordisk from Denmark, really at the top over there, both with 2.58%. Then you have SAP from Germany, Nestle from Switzerland, AstraZeneca from the UK, Roche, I believe, also listed in Switzerland, Novartis, Shell, HSBC, and LVMH. But yeah, looking at this list, you already see no major, huge international tech companies out there, right? So that is something to keep in mind if you invest into the Euro Stoxx 600. Tech is definitely a lesser role of that portfolio, but then again, you're more diversified, right? You have some other great industries and sectors represented there as well. So in simple terms, the Euro Stoxx 600 is much more balanced across industries, whereas the US markets is heavily dominated by tech companies. With this, let's actually jump over to the Euro Stoxx 50, which obviously has less companies represented in there, but I want to show you how that differs in terms of sector breakdown and country representation. So once again, you have a different breakdown here of ETFs available, because again, those are just indices, right? Like the S&P 500 is also an index. You buy an ETF that mimics that index. So we have to find the right ETF to follow that index of Euro Stoxx 50. So you have a couple over here, best performing one, then you have the largest by fund size, and the cheapest in terms of expense ratio. Once again, I want to stick with the largest to have a bit more apple-to-apple comparison. And you see already, this index is definitely less popular to track than the Euro Stoxx 600, because here the fund size of the biggest one is less than half, or pretty much half of what we previously seen. And this over here is from Xtrackers. So let's dive into this over here. And they actually pay out the dividend instead of accumulating for the other one. This one is distributing. The expense ratio is also slightly higher, which is interesting, especially considering that you only have 50 companies in here. Let's jump over to the holdings over here so you get an idea of what we have in there. And right off the bat, you see different countries being represented. All of a sudden, you don't have the UK, you don't have Switzerland. So this is really only Eurozone, you could say. And if we expand it over here, obviously Germany now being in second spot, Netherlands, and then a couple of other countries represented over there as well. And in terms of sectors, similar story at the top with financials, taking the top spot, then consumer discretionary, industrials, and then we have technology, a bit more represented over here with 18% versus the 8 point something in the Euro Stoxx 600. So if you're more tech heavy and tech interested, then potentially this might be a more interesting pick for you. Now, in terms of companies, again, very similar story, obviously without the Swiss and UK companies. We now have ASML at the top over here, SAP, LVMH. From France, really strong company, Siemens, Schneider Electric, Total Energies, Allianz, Sanofi, Deutsche Telekom, and Airbus over here. Again, for me, missing those cutting edge, tech companies, which unfortunately, we don't really seem to have too many of them in Europe. Hopefully that will change in the future. But for time being, if you were to invest in the Euro Stoxx 50, that will be your top 10 holding. And also noteworthy, that almost makes up 43% of the entire holding. So that's a really huge weighting on the top 10. Going back to the Euro Stoxx 600 as a comparison, that only makes up less than 20%. Definitely much more balanced over here, which is only natural the more companies you have inside of an ETF. Right, but let's actually have a look how those two ETFs compared to the market benchmark, the S&P 500, to see whether they're really underperforming or actually they're keeping up with the S&P. So jumping over to TradingView, we have all those three lines over here. At the top, we have the SPX, which is basically S&P 500 benchmark. And then we have the Euro 50 and SXXP, which is the Euro Stoxx 600. So if I zoom out all the way to all, you can see over here the timeline, then it's a very clear picture, right? The S&P 500 absolutely destroys those two indices. 391% return from when is this? Around 2002. So over a 23-year period, it absolutely demolished those two ETFs. But if I reduce the time period to only 5 years, well, now all of a sudden it gets a bit closer, right? You can see SXXP, which is the Euro Stoxx 600, up 82%, but then the Euro 50 ETF is up 101%, while the S&P 500 is up only 108%. So just slightly outperformed it. And you can see, over the years, more or less similar trends. But then the biggest difference comes from the last few months. And guess who came into power from the beginning of the year? If I go to year to date, well, here you see the difference, right? The S&P 500 is down almost 4%, while the Europeans are majorly up. The Euro Stoxx 600 up 7%, while the Euro 50 is up 10%. So here you see a major outperformance. But of course, this is the first time this really happened. Now the question is, will this trend keep on happening in the future? Or is this just a reaction to all the market frenzy from Trump's tariffs and all these things? That's a choice and decision you have to make for yourself. But this is something to keep in mind, that not always the S&P 500 outperforms everything. It's all a question of time period. And right now it seems really investors feel a bit more comfortable investing money into Europe, which in turn brings up the share prices. Just take the example of Rheinmetall, which is one of the biggest defense companies in Europe. Year to date, from the beginning of the year, they're up 134%, which is absolutely unbelievable, really remarkable performance. And that's the trend for a lot of the European defense companies for obvious reasons. With all the things that Trump has been hinting at, it makes sense that people feel more comfortable investing potentially and see potential returns in European defense companies. Now, how long will that trend continue? I don't know. Nobody knows. But certainly those who got in early got a really juicy return. But at the same time, keep in mind the market capitalization is still tiny, right? $64 billion. I mean, that's absolutely peanuts compared to some of the big US companies where we talk about trillions worth of market capitalization, which could also mean that they still have a huge room to grow going forward. Now, looking at those charts and the last few months' performance of the European stocks and ETFs, it was really surprising. However, despite all this, I personally don't see a strong enough case to move away from US stocks. This is the place where I see the next Apple, Microsoft or Palantir will come from. If the US was to enter recession, which may happen, Europe will likely follow. Global markets are highly correlated. Of course, currently, with all that's going on in the US, we see a major pickup in valuations in other parts of the world where people want to diversify, and I totally get it, and it might really make sense for you. But I'm really a long-term investor, and I don't invest based on president's decision. I really invest for the next 20, 30, 40 years, and I still see the US long-term really leading the pack forward. Trump came, Trump will go. I will outlast those 4 years. I'm sure we're going to see some crazy decisions and roller coaster of emotions through that, which I see as great buying opportunities. But again, long-term, I have conviction that the US will come out on top, and that's why I'll continue to invest there. That said, I totally understand why some investors want to diversify, and there are great options out there like all world ETFs. Or if you really wanted to dive into Europe, for example, I think the two we mentioned today, Stoxx 600 and Stoxx 50, could be great options for you. And lastly, I also want to mention irrational investing decisions, because I always look at numbers, historic returns, valuations, and so forth. But let's not forget, we are human beings, right? There is also an emotional component when we make investment decisions. And if you are from Europe, I totally get why you want to support local companies, right? It makes perfect sense, right? If you're in the US, obviously it's very easy and straightforward. Why would you go outside the US? You have an amazing market back home. But if you're from Europe, I know some of my members inside the Smart Money Club are from the Netherlands. I mean, of course, they want to have a part of ASML, one of the most successful companies in Europe, which happens to come from the Netherlands. So I totally get that people allocate some money there and to support the economy also, right? If all Europeans put their money in the US market, well, that's a reason why we have such low valuations also in Europe. So I totally get that, and that shouldn't be forgotten. And if you feel good about this, then do it, right? Maybe don't put all your money into European companies just because you want to be patriotic, but some of it can totally make sense. And I think we should speak more about emotional investing as well, because yes, this is part of our decision making. We are not rational machines. We are emotional human beings. So that's part of it. And you got to have conviction. And if you know the company, you've been growing up with those companies, you know them inside out because they basically come from your home country, then absolutely go for it. But do let me know in the comments down below, are you planning to start investing some of your money into potentially some European ETFs, or you will stick with US stocks or ETFs? And if you are based in Europe or the UK, it's important to find the right stockbroker. And in this video over here, I'm going to run you through and share with you my personal favorites. As always, thanks for watching. Stay healthy, get wealthy, and see you in the next one. Ciao.